Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with RE/MAX Escarpment Realty, and we have our number one Howler here, Teddy Bear Howell. He's an official real estate broker, and he's here to tell you what the Howell is going on. Well, let's get started here. What is happening in the RE/MAX Escarpment RE/MAX Niagara Appointment Centre? Always great to look at the demand side of the business to get some insights. This fall market is looking very different. From 2021 onward, every September kickoff week has been a jump in new listings versus the week before. 2025 is the first time in the last 5 years where sales rose in step with listings, 22% each. That's a huge market health signal. 2025 is a turning point. It's the only year where buyer demand kept up with the wave of new listings. That balance suggests buyers are feeling more confident and able to act as even inventory expands, the shift from the wait and see mood of the past few Septembers. So that's great news. We are seeing a shift. We are seeing signs of health in our market, and much different than recent years. I've got a report here from RBC Economics, and we're going to be talking about the recent Bank of Canada rate cut. What does it mean? The Bank of Canada's 25 basis point rate cut was in line with market expectations. It marks a restart of the easing cycle that began in June of 2024, continued in March 2025, and had remained on pause ever since. The overnight rate has now been reduced to 2.5%, closer to the bottom end of the central bank's estimated neutral range for interest rates of 2.25% to 3.25%. You can think of this as kind of putting the economy in neutral in terms of the monetary policies. Finally, housing activity has been in recovery mode since taking a plunge in the spring. Resale activity in August reached the highest level this year. That, however, has not yet spurred a turnaround in housing prices, which have continued to fall alongside shelter inflation and is giving Bank of Canada cover to opt for additional rate cuts if necessary. Still, house prices are one area that deserves close attention for what could impede future rate cuts. So there's a lot of variables right now. I mean, there's so many things going on. There's economic uncertainty, there's the tariffs, there's housing affordability, there's population growth. There's just so many things going on. I'd say overall, the Bank of Canada, it made sense for them to support because there's risks right now in terms of the economy, the labor, the employment. Inflation seems to be relatively in check right now as well. So I think I'd be expecting one more rate cut coming up in October. And for now, let's just be happy. I'm happy that we've seen the 25 basis point cut, which is what I was anticipating. And good to see that. What is specifically happening in our local markets? In Burlington, we've got a similar number of listings to last week. It's up slightly. Sales in the past 30 days is down slightly. We've got about 4.5 months worth of inventory in Burlington, and our sales versus new listings ratio has actually dropped back down into the 43%. So it's no longer balanced. We're back into a slight buyer's market territory again in Burlington, but I feel like that will be turning around in the coming weeks again. Median days on market for successful trades, 25 days, average of 38. And we're seeing most negotiations for successful transactions just under the 4% off mark for the Burlington area. In Hamilton, listings are similar to last week. They're up slightly. Sales in the past 30 days, like Burlington, are down slightly. We've got about 6 months worth of supply in Hamilton. So it's much more of a buyer's market in the Hamilton area, around 34% on the absorption rate. We're seeing median days on market sitting at 28 and the average days on market around 41. And again, we're seeing just under 4% as the median negotiation that's taking place for successful trades. In the Oakville area, we've got 427 active listings, which is up from last week. 53 sales in the past month, which is down slightly. And we've got a lot of inventory in Oakville. It's up to 8 months worth of supply. Very, very strong buyer's market in Oakville right now, sitting at only 24% absorption. Median days on market, 24, average 34. And as always, when there's cancels and relists and things like that, to refresh listings, the average days, the cumulative days on market keeps going up. The average cumulative days on market in Oakville sitting around 65. And that's a similar kind of a situation in Burlington, Hamilton as well. In Oakville, we're seeing the median for negotiations, again, in that 3 to 4% range in terms of a discount from the original list price. That's what I have for you today. If you have any questions about the real estate market, please reach out. Love to hear from my fans.